everyone, and welcome to ICB TV number 98, believe it or not. Our apologies for a slight glitch. We've had some technical issues with getting emails and things out to you, and some of the links weren't quite right. So really sorry about that. Hopefully we've got quite a few of you online now. So I just want to explain what's going to happen today and tomorrow. I'm going to cover two presentations. Today's is going to be on how we deal with imports after the 1st of January, and tomorrow is going to be how we deal with exports. And I've got some slides that I want to go through with you. There are quite a few. So I think the best thing to do today and tomorrow to run this is that I'm going to ask you, if you have any questions, could you please put them in the question and answer box rather than the chat line? Because then what we're going to do is we're going to download it, because I'm probably not going to take too many questions today. I'll download them, I'll work on some answers, and we'll come back either tomorrow, if you're listening to tomorrow, or we'll do them on Friday in Thankfully It's Friday, and see how we get through. But if there are any specifics, I'll try and deal with them then. So again, thank you for joining me. As you're all aware, we have big changes coming up on 1st of January, which is going to affect bookkeepers in the way we deal with VAT on any international or abroad sales, and lots of things are going on and lots of changes, and we are going to try to cover the basics for you. But what I will say at the start is that this is as the situation is today. Things are still changing. They're still going to be changing early into next year, and right up until July, the way we deal with things could very well change, and I will explain that as we go through. So if you bear with me, I am just going to share my screen and start from here. Okay, so we are going to start looking, as I said, at what's happening to customs, imports, exports, and VAT from the 1st of January. But the reason I've started with this is I just want to go through, for those of you who aren't aware, and I'm sure you are, but I'm covering everything. I just want to briefly explain the terms and to remind you that we're talking about the United Kingdom and Great Britain as well. And they are, as you're aware, slightly different, because the UK covers England, Northern Ireland, Scotland, and Wales. But Great Britain only covers England, Scotland, and Wales. And there are some differences into the way all of this is going to happen with Northern Ireland. So some of this is UK-wide, some of this is GB-wide, and some of this is geared in purely to Northern Ireland, and we'll deal with the two. We'll deal with the two separately. Because it's interesting to note that, as you're probably all aware, one of the biggest issues about this is how Northern Ireland is going to fare through this whole process with the border with Ireland. And under the Good Friday Agreement, that there should be no difference between the movement of goods and people and everything across the Irish border between Ireland and Northern Ireland. And because of this, they've set up something called the Northern Ireland Protocol, which has still yet to be signed off. So we have some changes happening quite possibly with what's happening. So as I said, today, this is how we understand as things are at the moment, because what's happening in Northern Ireland is that they are in a very unique situation in that they are part of both the UK VAT system and also the European system. So they're going to be running two lots. So if you're living in Great Britain, just be thankful that you're not in Northern Ireland and having to deal with two systems. And I have to say, can I thank Victor Brownlow, who is our branch chair in Northern Ireland, who went through this with me to confirm what he and I both think of as the current situation. And he agreed that it's not yet fixed, but he was a great help sort of going through this with me and making sure that I think I've got it as it should be. So, excuse me, I was about to sneeze, I think. EU transition, let's have a look at what's happening. Now, the UK has left the European Union. We left at the end of last year. And we are now in what's called the EU transition phase, which runs out on the 31st of December. So from the 1st of January 2021, new rules will happen regardless of whether the UK agrees a trade deal with the EU, because the trade deal is all to do with tariffs and sanctions and various other things. It's not to do with VAT, but I'm going to go through what's been set and what has still got to be agreed. The details of how we are going to invoice and treat VAT on all invoices to and from customers and suppliers in the EU have already been agreed, and these are not going to change. These are fixed. So what we're talking about VAT and invoicing today is what will happen. However, customs and tariffs details may change, and that's going to depend on whether the UK signs a trade deal with the European Union. And as we're all aware through looking at the press and on the television every day, this is still a very movable. Some days we're very close to signing a deal, other days we seem to be further away. So we're still not sure what's going to happen yet. Now, the one thing that's going to happen anyway is that because we're no longer in the European Union, every business who moves goods in and out of the EU will need what's called an economic registration and identification number, an EORI number, and it must start with the letters GB. Now, if anybody is currently trading outside the EU, so they're trading with countries not in the EU, like America, etc., then they will already have an EORI number, because they will have to have one in order to deal with the customs paperwork that's involved already. Now, one of the things that is going to happen because of this particular situation with Northern Ireland is that businesses may very well choose to move goods into and out of Great Britain through Northern Ireland. So from, say, from England or Wales or Scotland, they'll transfer across to the EU, but they'll go through Northern Ireland and then across the Irish border, or they might come the other way. And if you're going to do that, even though the VAT may be different, you will need an EORI number, but that will have to start with different letters, because they will have to start with an XI rather than a GB. So you might very well need two EORI numbers. So again, if you're in that situation, what I would say is, members, if you have clients who already are dealing with international trade, they will have been contacted by HMRC now to confirm these EORI numbers and whether they need to be set up. And there has been a lot of information going out recently on this. So let's have a look, first of all, at what's happening with border controls. Now, from January, any traders who are importing standard goods, and this covers goods, not services, will need to prepare for basic customs requirements, and you will have to keep records of these imported goods, but you will have up to 6 months to complete these customs declarations. And at present, it's not planned that there are any checks on items going across the border. Now, we all know, if you've read the news recently, that there are delays going across the border for lorries going across the continent through either via the Channel ferries or the Channel Tunnel or anything like that, that there are some issues still going on about that. But as far as the paperwork is concerned, you have to have your paperwork in order. But for going across, but for coming the other way, you do have 6 months to complete these import declarations. Now, from April, this is when we start to have the checks on particular goods. And in April 20, there are a specific list of goods that are coming into the country that you will have to pre-notify that you're bringing these into the country, and you will have to have health documentations. Now, these are all produce of animal origin and regulated plants, because there's you have to have licenses to import all these things. Now, there will be health checks take place, but these will take place at the point of destination, not at the border control point. So you will have to have those in place and pre-notify them, and they could very well or probably will be inspected when they arrive at their point of destination. From July 21, traders will there have to make full customs declaration at the point of import and will have to pay any tariffs. I'll talk about tariffs in a moment. And all the checks will take place at the border control point, not at the point of destination. So by the time we get to July 2021, which is not that far down the line, you will have to have full checks in place, and customs will be geared up to do this, and hopefully all the paperwork will be in place. Now, if you want to find out more about this, if you go onto gov.uk and put in border controls, then you will come up with all the details that are there. So those are the 3 dates you have to be aware of. The customs import declarations are going to get more severe as we get towards July. So by the time we're at July, we should have a full set of customs checks and import checks in place. So that's what's happening with the border controls. Now, let's just have a look at what's happening about this term tariffs. I'm not sure how much you know about tariffs, but a tariff is a charge that's placed on certain imported goods to ensure that domestic products and jobs are protected from cheaper imports. So we may be manufacturing something in the UK, which is quite expensive to manufacture, but there are cheap imports coming in from abroad. So to protect UK businesses, and this happens all over the world, it's happening in America, it happens in Europe, it happens all over the place, an import tariff is charged. Now, at the moment, because we're part of the EU until December for this, we don't have any import tariffs between any EU countries. So goods can travel quite freely across the borders. And this is one of the things that's being discussed as part of an EU trade deal, because if we get a trade deal with the EU, it may very well be that tariffs between the UK and Europe will be zero, because we will fulfill the requirements that they need. And we have currently been using the EU common tariff, but from the 1st of January, we will have our own tariff, and that's called the UK global tariff. And there isn't much difference between the two tariffs. The UK version has been somewhat simplified. If you log in and have a look at the tariffs, they are very, very complex, but basically what they do is they list all the percentages or the prices of tariffs that are being put on particular goods. And it's going to depend on the type of goods that come in, whether they're coming in by value or weight. If they're perhaps some form of livestock, the tariff will be imposed as a percentage figure of the value or the weight accordingly. So from the 1st of January, the UK will apply its tariffs to all goods that are imported into the UK. Oh, sorry, let me just take you back. All goods imported into the UK, but there are some exemptions. Now, there are some temporary percentage suspensions and tariff quotas. So that might mean that up to a certain level, the tariff is zero, and after that, you start to pay an import tariff. There are also a list of goods from developing countries, and if we are importing from those countries, we may not have to pay any tariffs on those. And lastly, that the country of import has a trade agreement with the UK. So if we're importing to the UK from a list of countries for which we already have a trade agreement, then no tariffs will be applied. And there are lists of those, and each day or each week more countries are added to that list. And again, they're on the gov.uk. So that's basically what's happening at the border control points, customs, and also what's happening about import tariffs. So let's now start to have a look at how this works in reality. Imports and acquisitions. What I'm going to do now is I'm going to take you through stage by stage and have a look at what the current situation is, which is a reminder of where we are at the moment, and then have a look at what's going to happen in January. So just a quick reminder, when you're doing your VAT return, or if you're studying and you're learning about EU VAT and things like that, if we are bringing goods in from an EU country, it's not a purchase, it's an acquisition. So that's a term that you will be familiar with. And at present, any goods brought in from outside the EU is termed an import. So we are looking at imports and acquisitions. Acquisitions are goods brought into the UK from Europe, and imports are goods brought into the UK from outside. So again, the USA. And under current import rules, there are differences on how it's treated, depending on whether those goods come in, whether they're acquisitions or whether they're imports. So the treatment of VAT and import taxes are very, very different. So let's have a look at acquisitions first of all. So acquisitions are goods purchased from a seller within the EU. So this is your box 2 and box 4, but box 2 of your VAT return. Now, if it's a business to consumer, B2C, the seller is going to charge VAT at their country's rate unless, let's look at that first of all. So if you are a consumer and you're buying goods from, say, a supplier in France, they will charge you French VAT on those goods, and you cannot claim that VAT back because you are a consumer. You are the end user of that. Now, if you're selling to Europe, you will know as well as I do that we will charge our customer in, say, Germany, 20% VAT because that's the standard rate of VAT. But what happens is each country has something called a distance selling threshold. Now, if a country is selling goods to private individuals, which goes over that limit, and it's around about 35,000 euros a year, then you will have to register with that particular country's tax office and pay VAT in their country. So up to the distance selling threshold, you just charge them VAT at your own country's rate. Once you exceed a certain level, the distance selling threshold, you have to then register with that particular country for VAT and charge VAT at their level and pay VAT to their particular tax authority. Now, business to business, B2B, the way that's dealt with for goods between Europe is that you exchange your VAT numbers. So we would exchange VAT number with, say, a Spanish company, and no VAT is charged. Notes go on to the invoices that this is a business to business. VAT numbers have been changed. No VAT is charged. But if we are actually a business in the UK that's acquiring such goods, you will have your nominal VAT in there. And don't forget, your software will have a VAT code that covers EU acquisitions. And depending on whether it's going to be a zero rated item or a standard rated item, it will put the relevant VAT in boxes 2 and box 4 of your VAT return. Now, the reason it's in box 2 and box 4 is it will cancel each other out and you won't actually have to pay any tax, hence the zero tax, but it does show HMRC the amount of VAT that would have been charged had that purchase been made within the UK. And also the value of those appears in box 7 and 9. So box 7 is the value of your inputs, box 9 is the value of your inputs from EU countries. Now, if you are buying services from another country, that is dealt with under the reverse charge system. It works exactly the same way. No VAT changes hands, but for the reverse charge, and we are going to learn an awful lot more about reverse charges over the next couple of months because it's coming into this country more and more. The reverse charge system, instead of putting the VAT in boxes 2 and box 4, puts it in boxes 1 and 4. But the value of the inputs appears in boxes 6 and 7, and nothing appears in box 8 and 9, which is the EU transactions. So the VAT, nominal VAT appears in boxes 1 and 4, and the value of the goods, the service appears in boxes 6 and 7. So that's VAT on acquisitions. Let's have a look at what happens with imports. Now, remember, imports are goods that come in from outside the EU. So let's have a look at what happens here. Now, VAT is due at either normally 20% or 5%, depending on the item concerned. That import VAT is due to be paid at the point of import. Okay. At the moment, goods under the value of £39 come in free of VAT. It's called a low value consignment relief. So if you're bringing goods in from abroad less than £39, there is no VAT. But if you're over the value of £39, then you are going to have to pay VAT at the point of import before you actually receive the goods. So the example I've got there is if you've got goods valued at £1,000 coming in from, say, the USA, the value of the invoice is due to the seller. So you have paid your supplier £1,000 or equivalent in dollars. Now, the USA, because they have exported it, will not charge you a sales tax. It'll be zero rate for sales tax. So you will pay the value of the goods. But in addition, HMRC are going to charge you, if it's standard rated, £200, which will be paid to HMRC before the goods are released into the UK. And you will actually have to pay this. Now, normally, you have to pay the freight company. Now, if you're if Royal Mail happens to be delivering this, they may very well contact you and say, look, we've got these goods in waiting to be delivered to you, but you've got to actually pay us the VAT on this import VAT, and then we will deliver them to you. Now, if you are doing this on a regular basis and you have a freight company that you employ and you have a contract with, it may very well be that the freight company will pay HMRC and invoice you for the VAT, and you pay the freight company, and that can sometimes speed up the import to you so that the goods can be released to you. However, as import VAT, you cannot treat this as VAT that you can reclaim at this stage. So you're actually paying this VAT out, but you can't claim it back on your VAT return in box 4 yet. So I used to be involved in this when I was in practice, and we used to bring in works of art from either North or South America, and we'd put them in bond. And then when we actually brought them into the country, we would have to pay the VAT to the freight company at 5%, because artworks and works of antiques and various other items are vatable at 5%. So I used to actually have to put this into the accounts, but I would put it in a holding account called import VAT, and I would store it in the accounts somewhere around in the chart of accounts near to the VAT import VAT output accounts. And so I could see at any stage the VAT that I'd actually paid against what I was going to claim back at a later stage. Because what then happens is, once that import VAT goes to HMRC, either directly from you as the end user or through the freight company, HMRC will send out to you something called a Form C79. Now, once you've got that Form C79, you can then reclaim that VAT back as input VAT in box 4. Now, how you do that, I used to do it as a manual journal and do an adjustment to the VAT return for it, but your software maybe might be slightly more sophisticated than the software I used to use, because I'm going back a few years now. And you'll claim it back, and it will come back to you in the next VAT return through box 4. However, there can be a delay in claiming this back, because depending on when your VAT quarter ends, you could be paying it up in one quarter but not able to claim it back until the next VAT quarter. So you could have a delay of up to 3 months before you can actually get your VAT back. If you happen to be paying it out and receiving the C79 in the same quarter, then it's going to appear in box 4 and you will get your money back in the same quarter, but you've still got to pay the VAT, and then you claim it back from HMRC. So that can cause cash flow issues, because if you're bringing goods of high value and you're paying the import VAT on them and it takes a while to get them back, that's a cash flow issue for you. Okay, so now let's look at what is going to happen to the new system. Now, from the 1st of January, of course, we are outside the EU. So for Great Britain, and as I said, I will come to Northern Ireland in a moment. So for all businesses within England, Wales and Scotland, everything you bring in is going to come in as an import. So there's going to be a lot more paperwork involved. However, there are 2 ways of dealing with this. And one is for goods that are coming in up to the value of £135. So this lower value relief of £39 is going to disappear. That's gone, or will go, on the 1st of January. So if the value of your goods being imported is less than £135 and you're intending to sell them on, then you only have to declare VAT at the point of sale. So that's your sales VAT. Now, you've brought them in at £135, but you're selling them for more, so you're going to report your VAT in box 1 at a much higher rate. However, if you're not going to resell them, then you're probably still going to have to pay the VAT and possibly claim it back. Now, these goods, although they're at a low value, are going to be subject to normal customs processes and procedures. So you're going to have to fill out your customs forms, but the forms are going to be simplified. But you should notice that the £135 actually refers to the value of the entire consignment of goods, not individual shipments. So if you're importing goods, say you've bought in, I don't know, 10 goods at £35 each, the value of the consignment is £350 and therefore does not fall within this limit. Gifts coming into the country to the value of £35, the relief for that remains, and these are basically for gifts coming in for private individuals from people abroad who are sending Christmas presents or something else. So up to the value of £39, the goods remain, excuse me, and if you're actually sending goods out of the country, you often have to declare the value of the goods and what's in there, so that they know at the other end whether they've got to pay an import VAT at the other end. Now, this new import, this VAT doesn't apply to items that are subject to excise duty, so tobacco and alcohol, because they will still have excise duty to pay as they come into the country, and anybody that's involved in that will be well aware of how that's going to work. And also, it doesn't apply to goods from Jersey and Guernsey because they're covered by an import VAT accounting scheme. Now, I'm not going to cover that in this presentation or even tomorrow's, because that is a very specific thing, and we can deal with that with anyone who deals with businesses in Jersey and Guernsey. We can deal with that separately. So what happens if the goods are above £135? Now, this is where the big change is coming in, because you can now use something called postponed VAT accounting. Now, you can use postponed VAT accounting where your goods are being imported for use in a business. So this is business to business, not business to consumer. You will have your EORI number, which starts with GB, and it has to be included on the customs declaration. And you have to have your VAT registration number on the customs declaration where needed. Now, what this is going to do basically is it's going to treat imports in a similar way to the way we have dealt with business to business within Europe. And it is, I think, going to ease the VAT situation. Now, one thing to notice that if your goods go into a bonded warehouse, no VAT is declared until the goods move into free release. Again, when I was in practice, the client we had, we would put artworks into a bonded warehouse. We take them out maybe for 90 days, because if you're only bringing them into the country for 90 days, no import VAT is there. We'd show them to clients, and then maybe we put them back into bond, and if they didn't like it, it would go back to America. So we weren't actually dealing with VAT. So bonded warehouse is treated slightly differently. And an online statement will be available, so you will be able to know the total amount of VAT on the imports that would be paid. Under the old system, remember, you were paying import VAT. The value of that import VAT is still going to be shown, and there's going to be an online statement on gov.uk, which is going to allow you to log in when that's set up and usable for you, so you can see exactly how much is available and what the VAT is at the moment. So that is what's going to happen. But now let's have a look at how to account for it. So the big difference is that no VAT is going to be paid at the point of import. So goods can come into the country, and provided that your customs declarations and your import forms are completed correctly and in time, there should be no delay at coming through customs and coming to you and being released to you before you won't have to pay any VAT. So the difference, if we go back to our example, and these goods of value of £1,000 are imported now, it doesn't matter whether these come from USA or, say, France, anywhere in Europe, because they are imports, and the system will be exactly the same, regardless of which country they come from. You must still make your customs declaration, so all the forms have to be filled out, but the goods will be released, and the £200 VAT at standard rate will be declared on your next VAT return. Now, this appears as a reverse charge. So rather than the C79, you paid out the VAT and you're claiming it back in box 4 as a C79, this is treated as a reverse charge. So the nominal value of the VAT that you would have paid is just going to appear in boxes 1 and 4 of your VAT return. And the value of the goods that you're bringing in will appear in box 7. Now, because there are no more EU imports, nothing is going to go in box 9, except for businesses based in Northern Ireland. And we'll come to that in a moment. So a reverse charge, and what it means is that it should improve businesses' cash flow because no tax is actually going to be paid or reclaimed. It's there in principle, but it's not actually changing hands. So that £200 that I would have had to have paid out under the existing system and claimed back, say, 3 months later, now just sits in the system as a nominal transaction and appears as a reverse charge in my next VAT return. So hopefully that shouldn't be too complicated. The biggest problem I think that's going to happen to this is not the VAT, because we know how to deal with reverse charge. We can deal with the VAT. It's getting the clients and the businesses that are doing the imports to make sure that they have their customs declarations and all their paperwork up front before the goods come into the country. If that's okay, it should be fairly smooth, but we'll wait for January to see what's actually going to happen. Now let's have a look at what's happening in Northern Ireland. I'm going to touch on this today, and then I'm going to touch on it a bit more tomorrow. So by the end of tomorrow, we should have a fairly clear idea of what we think is going to happen. And as I say, it is think it's going to happen. And again, if you read this in on gov.uk, it can be quite confusing to try to get to the bottom of how this is actually going to work and what the rules and regulations are. Now, remember, Northern Ireland will remain in the UK VAT area, but it will also align with EU VAT rules. So any lower rates or exemptions, say, for example, in Ireland, will also be applied in Northern Ireland because there is this free movement of goods across the Irish border. There are no tariffs or restrictions on trade between Northern Ireland and the EU, so there are no tariffs at all. And because it's applicable to Ireland, it's also going to be applicable between Northern Ireland and the rest of Europe. So there are no tariffs if you're in Northern Ireland. But Northern Ireland will also benefit from any trade agreements that the UK has signed with other countries. Now, obviously, if we sign a trade deal with Europe, Northern Ireland will fall quite neatly into that, because what it's doing with Europe at the moment is exactly the same as Great Britain is going to be doing. Now, this is where I started to get confused, and I had a chat with Victor on Monday, as I said, and I think he managed to convince me that I'd got it correct. Now, there are no tariffs between or customs or changes of VAT between Northern Ireland and Great Britain. We have this free trade because they're part of the UK VAT area. However, the EU is going to treat the transport of those goods from their perspective from Northern Ireland into Great Britain as an import, as an export for them and an import for us. So as far as the EU is concerned, we're importing from Northern Ireland. But as far as the UK VAT is concerned, it's just a standard VAT transaction. Now, I am going to have to come back and confirm the final details of this, and that may not happen until January, but this is as we understand it at the moment. So all sales between Northern Ireland and Great Britain will be standard normal VAT rules for the UK. Trade between Northern Ireland, however, there could be some checks, including customs checks, because we have what is in effect a border in the Irish Sea for some import-exports. So there will be some customs declarations that are needed. Now, we know that that's going to happen for, say, for example, the transport of live animals and these regulated plants. That is most likely to happen, but there may possibly be other customs checks as well. And I think I'm pretty certain we're waiting for the Northern Ireland Protocol to be signed to actually decide what's going to happen about that. So it's watch this space for Northern Ireland. It's very much a movable feast, and we will try to keep you updated on that as it happens. Now, a couple of changes, not so much to do with import VAT, but at the moment, if you have a client who travels into Europe, excuse me, travels into Europe for business purposes and they pay EU VAT in whichever country they're in, at the moment, they can use the EU VAT refund system for claiming back through HMRC. Now, that stops on the 31st of December. You can claim them up to and including the 31st of March 2021. So you have this 3-month period for claiming back the VAT as you do at the moment. But if you have expenses that are incurred in Europe after the 1st of January, you cannot reclaim this back through the normal UK VAT reclaim channels. And each EU state will have its own rules for refunding back VAT, and businesses will now have to register in each relevant country in which they pay VAT in order to claim it back. So if you have a business client who's traveling, say, to France, then down to Spain, across to Italy, back up through Germany, or however they're going to go, and they're paying expenses, you're going to have to claim your VAT back from all 4 countries, which I think is going to be a nightmare. However, there are some EU changes afoot, which means that by July, you may be able to register with a single VAT country in Europe and then claim it back in a single system. But again, that's not been decided yet, and it won't be coming in for a while. Again, there is a link there to explaining how that's actually going to work. It's the europa.eu. So this is the EU taxation website. So this is where we are. There's a couple of things just to say in conclusion. Commences on the 1st of January, so be aware for this. All businesses who are trading abroad will need an EORI number starting with either GB or XI. And the XI, remember, is if you are moving goods to another country through Northern Ireland. All goods coming from abroad, including Northern Ireland, will be treated as imports for customs purposes, and you may or may not have customs checks on goods coming across from Northern Ireland. Special rules exist between Great Britain and Northern Ireland. If you are bringing in goods to a value of over £135, then we're looking at import VAT being declared as a reverse charge using the postponed VAT accounting in GB. But Northern Ireland will continue to record VAT as now for cross-border transactions within the EU. So if you are based in Northern Ireland and you're buying and selling from European businesses under the B2B system, you will exchange VAT numbers and you will record your invoices and VAT exactly as you do now. So cross-border transactions for Northern Ireland to the EU, the VAT will appear in boxes 2 and 4 if it's an acquisition, boxes 1 and 4 if it's a reverse charge. And if they're dealing with outside the EU, all of those become imports exactly the same as it does in Great Britain. But for Great Britain, we're actually dealing with Europe exactly the same as well. They're all imports. And consignments valued at less than £135 will declare VAT only when it's sold. Gifts to the value of £39 are free of import VAT completely. And you have to register within relevant EU countries to claim any VAT incurred when travelling within an EU country. So, huge amount of information there. Let me stop sharing my screen. We have a couple of questions coming up. Now, I do know that I'm not going to be able to answer many questions today, because what I'm really looking for today is to look at your questions and go away and do some research, because until I get your questions, I'm not really sure what you're going to be looking at. Karen, 2021, should it be 220? Everything is from the 1st of January 2021, so my apologies if I said 2020. Valerie has said, does plant products include timber? It's regulated plant, so I'm not sure if timber is included in that, but we can certainly look. And somebody, Michelle has said, can we have a copy of the slides? And Joanna said, can we have a list of the boxes for everything? Now, what we're going to do is we are going to put this up on their website. We're trying to get, like we have a COVID-19 hub, we're going to have an import-export VAT hub. What's gone up on the website this week is this has gone up on the website with all of this information as an article. So it is there, you can read it. So a lot of the basic information is there. You'll obviously be able to see this again And over the next week or so, we will get this up onto the website into an easy to read formula. The video available to rewatch, it usually goes out fairly quickly through Facebook or YouTube. So we've got a lot of information going out. So hopefully that's starting to open up the whole scenario. We have left it as late as possible to get this out to you because for two reasons. One, we were still not sure what was happening with signing of a trade agreement with the EU, which is why we have not covered this first. And secondly, if you are already involved in trading, you will probably have had your clients will have been contacted by HMRC already. Now, there are 3 areas that I would strongly advise if you want to do some research over and above what ICB are giving you. One is obviously gov.uk, and if you go onto the gov.uk website and you put in EU transition into the search box, then you will get a lot of information there. The Department of BEIS, its Business, Enterprise and Industrial Strategy, does have an awful lot of information on their website as well. And as I've said before, when I do Thankfully It's Friday, I've signed up to any emails that are coming out on EU transition, and the BEIS department do get them out most days. We don't have long to go now till the 1st. And I have to say, I also get an awful lot of information from the Avalara website, AVALARA. They're one of our partners, so quite happy to promote what they do. They do a lot of videos on this. It's very helpful. They're very well presented as well. So you have 3 other ports of call. You've got gov.uk, you've got BEIS, the department, and you've got Avalara, who are doing an awful lot for you. Susanna has asked one question: how will services be treated when purchased from EU countries? I'm actually going to deal with services tomorrow, so I will come back on that one tomorrow. I know that's input there. Input, it's buying in goods and services, and I will come back on that one tomorrow, Susanna. So a couple of comments on the chat coming in. I have some questions that I will check, and Steve's come back on the chat line and said, oh, thank you for the hard work you put into this, fun and games ahead. I have to say the other reason that I haven't actually done this yet is because it is so complicated. It has taken me a long time to get my head around this. But hopefully we will be there to support you on this. And tomorrow I'm going to be here again tomorrow to look at what's happening with selling abroad. So we're looking at exports, and I will hopefully come back to you with some questions, and I will have a bit more time tomorrow, hopefully, to answer your questions. But I will also be answering questions on Friday. So we're here today with number 98. I shall be doing 99 tomorrow. And on Friday, I will be back with Gary, and we will run our 100th ICB TV. So if you have any emails or queries in the meantime, please send them into member services for my attention. They will pass them to me fairly quickly. I'll try and get them across to me as fast as I can. And thank you very much for your information. Sylvia's come in, some really good information and flowcharts on the Buckinghamshire Business First website. So bb.uk.com/UK-and-EU-transition. So Buckinghamshire Business First website. So thanks for that, Sylvia. So you might find that your own local authorities or your own business areas have got equal amount of information. So thank you all for your time. I will be back with you tomorrow at 2 o'clock. Hopefully we'll be over our little glitch tomorrow, and we'll be on time. So thank you very much indeed for your time, and I will see you tomorrow. Goodbye, everyone.